For the last 24 hours, Bitcoin has been, well, suffocating. There's no other word for it. In this briefing, we're going to dig into exactly why that is, check the tapes on our last forecast, and then give you the full game plan for the storm that is definitely brewing. So let's jump right in. Okay, no beating around the bush. Here's the core takeaway right up front. This market is being squeezed so tight it can barely breathe. And when you see this kind of extreme compression, it almost always forces a sharp, nasty move to hunt liquidity. To trigger a cascade of stop losses. I think that move is just around the corner, and my main forecast for the next 24 hours is a quick spike, a pulse test, right up to $88,800. So how do we get to that number? Well, here's the roadmap. First, we're going to hold ourselves accountable and review yesterday's call. Then we'll diagnose what the market structure is telling us right now, look under the hood with some key on-chain data, map out the most likely scenarios, and then wrap it all up with an actionable trading blueprint you can actually use. All right, first things first. Let's review the last call. I believe in total transparency. We've got to check the tapes and see if the analysis actually held water. So the forecast yesterday called for garbage time. Basically, a dead, choppy sideways grind between about 87.6 and 88.4. And, well, that's exactly what we got. In fact, for the last several hours, the price has been stuck in a laughably tight range of less than $100. It was a perfect read. So the big question is, why? How did we know that was coming? It all boiled down to this one single number, a 1-hour trading volume of just 11 BTC. I mean, that's pathetic. When you see liquidity dry up like that, it's the market screaming at you that it has zero fuel in the tank. No conviction, no direction. That was the smoking gun that confirmed the entire sideways call. Okay, so that explains yesterday. Now let's see what the current market structure is telling us. It's time to read the footprints the price action is leaving behind right now. So if we zoom out to the daily chart, the bigger picture is still one of bearish pressure. Price is getting smacked down by that 20-day moving average at 89,400. That's a heavy, heavy ceiling. But when you zoom into the 4-hour, the story changes. It becomes all about this extreme squeeze. The Bollinger Bands are tightening up like a coiled spring, and the MACD, it's completely flatlined. The market is literally holding its breath. And this leads us to what I'm calling the market's current life cycle status, hibernation. I mean, look at it. The RSI is smack in the middle. All the indicators are tangled up. There's no edge here. It's not overbought. It's not oversold. And here's the critical thing you need to understand about a hibernating market. Any sudden twitch, any little move is probably a trap. It's a fake out, not a real trend. So this is the box, this is the cage Bitcoin is trapped in right now. You've got that hard ceiling, the upper boundary at 89,400, and then you've got the floor, the lower boundary of support, right around 87.7. For now, that's the entire game. The price is just a pinball, ricocheting between these two levels. Now for section 3. So the charts are telling a very clear story of compression, but we need to verify it. Let's pop the hood and look at some on-chain data to see if it backs up what the charts are showing us. Okay, this right here is a liquidation map. Think of it as a treasure map for the big market players. All those bars represent huge clusters of stop losses from leveraged traders. And what do you see? There's a big, juicy pool of short liquidations piling up right around 88,800. And another one for longs just below 87.7. Price acts like a magnet to these zones, and this is exactly why our forecast is targeting that 88.8 level. That's where the fuel is. And here's the other piece of the puzzle. This chart shows the max pain level from the options market, and it's way up there at 96 grand. Now, max pain is just the price where the most options contracts expire worthless. And while we're nowhere near it, its high location acts like a hidden gravitational pull. It's this weird, invisible support that makes a total price collapse unlikely right now, and it helps explain why we're just suffocating sideways instead of dumping hard. Okay, let's bring it all home in section 4. We've looked at the charts, we've looked under the hood. Now let's piece it together and outline the most likely paths forward for the next 24 hours. So let's break it down by time frame. Over the next hour or so, expect more of nothing. Continued hibernation, weakened liquidity is just gone. But within the next 4 hours, that's when I'm expecting that pulse test. The pressure is building, and a quick spike up to 88.8 to hunt those shorts is simply the path of least resistance. Now looking out over the next full trading day, the only thing that matters is the daily close. If we can't close above 89.4, then this whole thing was just a pause before the next leg down. And that leads us to the final and, frankly, the most important section, the trading blueprint. Because analysis is one thing, but turning it into a concrete plan of attack, that's the whole point, right? In a market like this garbage time, you absolutely cannot chase trends. You'll just get chopped to pieces. You have to adapt. So I've got 3 core strategies for you. Number 1, defend the boundaries. Number 2, follow the volume. And number 3, for the more advanced folks, collect the premium.
All right, plan A. This is my preferred play right now. It's called boundary defense, and the logic couldn't be simpler. We fade the edges of the range. So the trigger is a spike up into that resistance zone between 89.2 and 89.4. If we get that, the action is a light short, or if you're an options trader, you sell a $90,000 call. The target is a rotation back down to 88 grand, and this is crucial. You have a hard stop if a 4-hour candle closes above 89.6.
Now, for Plan B, our alternative, this is the breakout follow-through. But listen very carefully. We do not touch a breakout unless it's confirmed by a massive surge in volume. The trigger is super strict. 1-hour volume has to explode past 500 BTC, and the price has to break 88.5. If, and only if, both of those things happen, then you could consider a quick scalp long, taking profit immediately at the next major resistance around 89.3. It's all about discipline and confirmation.
Finally, Plan C. For those of you who trade options, this is all about collecting premium. The logic is simple. You're betting that Bitcoin stays stuck in its cage. The action is to sell an iron condor. It sounds fancy, but all you're doing is selling a put way below the price, say at 86K, and selling a call way above the price, like at 90K. You are literally getting paid to bet that the market will do nothing. Just make sure the reward is worth the risk.
You know, when it all comes down to it, it's about this one idea. The market is a flat line. Stop trying to find waves that aren't there. Right now, in this kind of environment, patience isn't just a virtue, it's your most powerful weapon.
And make no mistake, this suffocation will end. A violent, powerful breakout is coming. So the only question you need to ask yourself is this. Based on the plan we just laid out, are you going to be the hunter, or are you going to be the liquidity that gets hunted? I'll see you tomorrow to break down whatever comes next.